Welcome to Alpha Recap. We're recording after the bell and we're breaking down the biggest news from the session. As always, if you have questions, you can reach us at stockalpha.ai. Let's dive in.
Thanks. Today the headline was Nvidia's fourth quarter report, the obvious catalyst for the day's volatility. But the more durable story we've been tracking is the acceleration from copper to optical interconnects inside AI data centers.
Wait, say that again? Optical over earnings? That sounds like a big claim.
Yeah, absolutely. The note we covered pointed out that the optical interconnect market is expected to roughly double over the coming years, and hyperscaler capital expenditure plans now top $600 billion.
That's huge.
It is, and the reason is both technical and financial. Optics scale bandwidth with lower power per bit, and they reach farther than copper. As AI clusters get denser, copper hits power and thermal limits. Signal integrity becomes a real problem. Optical links reduce routing headaches, improve density, and cut cooling needs.
Right. And the other thing is that it's not just an engineering quirk. It changes procurement and manufacturing plans.
Exactly. If hyperscalers are planning multi-year Capex programs totaling well into the hundreds of billions, component makers can plan capacity expansion, secure design wins, and lock in long lead orders. That decouples optical suppliers from the ups and downs of a single GPU cycle.
So in plain terms, Nvidia's earnings will move prices in the short term, but the structural re-architecture toward optics could re-rate certain suppliers over many quarters.
Put simply, a beat or miss from Nvidia will cause immediate noise. But vendors with real design wins and capacity aligned to that $600 billion Capex pool can win no matter what in the medium term.
Let's run through some of the other names and numbers we saw today. Taboola posted a split result. Can you unpack that?
Sure. Taboola reported GAAP earnings per share of 17 cents, which beat by 6 cents. Revenue came in at about $522 million, missing by about $15.5 million. I mean, when you step back and look at this, that kind of split typically says margin control is improving, but demand is softening.
So some people cheer the EPS beat. Others worry about top line. What's your take?
Treat the beat skeptically. If revenue trends are weakening, margin gains can be a short-lived fix. Cost cuts only go so far. Look at churn, customer count, and cash flow before you assume the beat signals durable improvement.
Regions Financial also got attention. The note mentioned regional banks and asset quality commentary as key drivers. Regions was trading at $28.44 and was up about 6 to 7% over the last 6 months.
Right. These names still move on net interest margin and deposit dynamics. For a regional bank like that, quarter-to-quarter guidance on NIM and credit quality will matter more than macro headlines.
And in industrials, Parker Hannifin was called out for aerospace strength in the fourth quarter of 2025. That's a constructive signal for industrial exposure.
Yeah, aerospace is a higher value end market, and it can push margins up if volumes stay healthy. For industrial investors, that's the kind of operational tailwind you want to see.
Copart had a rougher read, with slower auction volumes hitting the model.
Copart relies on high salvage volumes and per unit pricing. Slower auction growth is a direct headwind. For investors there, the key is monitoring salvage supply and dealer and insurer behavior that feeds their auctions.
What about mid-cap semiconductors like Himax? The coverage called it a holding pattern.
Himax was trading around $7.72, and it was basically flat since August of last year. Mid-cap suppliers often need a visible OEM demand pickup or margin improvement to break out. No obvious catalyst, no momentum.
There were also a bunch of corporate filings. Empire Petroleum, Newmark Group, and Starwood Property Trust filed 8Ks on February 25, 2026. These filings often punch above their weight in small and mid-caps.
Exactly. 8Ks can contain exhibits, restatements, or operational updates that move prices quickly in event-sensitive names. For REITs and smaller caps, these are items you pass immediately. They can change valuation assumptions overnight.
Okay, let's pivot and talk implications for different investor types. Short-term traders. How should they have approached the day?
Nvidia was the immediate catalyst, so traders should have expected elevated volatility. A clear framework. Use tighter stops, consider options for convexity, and watch liquidity when trading earnings reactions. If you're sensitive to quick drawdowns, size down high beta positions.
And thematic or tech allocators?
The optical narrative is the clearest actionable trade if you have a multi-quarter horizon. Hunt for suppliers with documented hyperscaler design wins, scalable manufacturing, and favorable cost structures. The structural Capex pool supports overweight positions in select names, even if Nvidia's print disappoints in the short term.
Value and income investors?
The Berkshire-type thesis remains relevant for buy-and-hold investors who prioritize durable capital allocation and diversified earnings. Defensive plays in industrials or carefully monitored REITs can work the cash flow stability.
And for mid-cap and event-driven players?
Focus on evidence, guidance, order trends, and volumes. Hymax and Copart are examples where, without a catalyst, you can get stuck in a holding pattern. 8Ks and smaller names are particularly important. They can flip a thesis fast.
So what are the practical next steps investors should have taken after the close?
Prioritize time horizon. Trade around Nvidia and invest in the optical migration. Hunt for durable design wins. Treat EPS beats with revenue misses skeptically. Dig into cash flow and churn. Monitor filings closely. And use portfolio sizing and hedges to manage event risk.
Big move.
Not what anyone expected.
Yeah, that tracks.
To sum up, the headlines today focused on Nvidia's fourth quarter result. Naturally, that drove short-term headlines and volatility. But the more consequential multi-year thesis is the re-architecture of data centers toward optical interconnects, powered by hyperscaler Capex that's measured in the hundreds of billions of dollars. Trade the headlines. Invest where the evidence of durable demand and execution exists.
Clear takeaways. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening, and we'll see you next time.
Thanks. Talk soon.